Okay, so let me begin. Good afternoon, forever you are listening to me. You are seeing my screen. The reason of coming to this session is just to help you to understand how to have your entry, like confirmation entry, your confirmation entry in a trade. You know, uh, personally, you have done your analysis, you have done everything in trading, but at the end of the day, you keep on learning and know what can help you in this journey of trading is only pressing buy or sell. So when will you press buy and when will you press sell? And that's why I'm doing this thing maybe to help you to understand your entry confirmations on the charts. And most of your the so-called mentors, they do send setups and everything. They won't tell you this. They won't tell you this. So for me, I'm just doing this. Then it can help one or another for your own goodwill. It's okay. Now, open your eyes, let your ears to listen, and your mind to be here. If you're doing something, just give me 30 or 20 minutes, then I'll be done. Then focus on other stuffs. In the meantime, let's begin. So, if I have a book and a pen, if you want to write something, okay. Now, personally, I do analyze the market from the daily time frame. Daily time frame. So under the daily time frame, if I did some videos back, I think it's a day ago. Your time frame that you need to analyze. If you have not gone to watch that video, just watch there on the YouTube channel. It's there. You can go there, watch, and do your analysis. It's okay. Now I said this on the daily time frame. Personally, I do use the fair value gap for entry. Fair value gap comes in when the market has taken liquidity on either high or the low side liquidity or the buy side liquidity or sell side liquidity. Then it creates a liquidity void. Then it comes back as a retest to the fair value gap. Then it goes up again if it was a buy setup. Just like this one. This is a volatility 10 index. Let me clear everything. Hope my chart is visible and you can listen to me. So if you can see this this chart, let me try to zoom. Let me try to zoom. So this market, this is a weekly time frame. As you can see, this market has not taken any liquidity on the weekly time frame. It has not taken like it took this high before. It took this high. Whenever the market takes the high, it goes down to pick an order. It's okay. Now this high was taken. It went and retested. So it's going up. Maybe it wanna go up to fill this high. To take this high or to fill this order, this fair value gap that is paired with an order block. Are you together? So this anticipation of this market, it's going to fill this fair value gap, or it wanna take this high. Are you together? Now on the weekly time frame, that means it has not filled this this fair value gap halfway, 50%. It has not filled this fair value gap 50%, and that means this market might come up and fill this market 50% up to that point. So this is our anticipation point. Are we together? Now our take profit, if you're buying this market, should be here. Now this line that I've drawn, the red line, there should be my take profit. Are you together? So I'll be looking for only buying opportunities to this point. Why? Because this market is going to fill this gap. After it has filled this gap, will I be waiting to buy or sell? The market will show you that you are buying or you are selling. Are you together? Hope you are getting what I'm trying to explain to you. So the market moves in search of two things, liquidity and the orders. Whenever the market picks an order, it goes back to pick a liquidity. Whenever it has taken liquidity, it goes back to do what? To fill an order. Just like this point here. This market took liquidity here. Are we together? Liquidity is just money. That means when people are trying to sell a lot of assets here, the market went and put them outside, like they were blocked outside, and the market started buying. So this is a liquidity here. Whenever it has taken this liquidity, it goes up to pick what? An order. And it's going to pick this order, these fair value gaps. Are we together? Now, after you have identified that the market is picking that order, what will you go and do? You come to the daily time frame. Remember, your bias, your direction is what? It's a buy. So you're looking for a buying opportunities. Under buying opportunities, what are you looking? Under this leg of a daily order block, are you seeing any order block? I mean fair value gap? Yes. I'm seeing this fair value gap of mine. And what can you notice? You can notice this, that this market has been retesting here for a period of time. Are we together? Now, after identifying this, let's assume that this market has not come, it was from this red line. Now you want to buy this market. The moment you see something like this on a daily time frame, that liquidity has been taken here, and this candle that took liquidity was engulfed. Are you seeing my point here? Was engulfed. So the moment you see this point here was engulfed. So personally, as for me, I normally mark this candle and I go back to the lower time frame to see if I can get an order block around that point. And I'm not seeing a nice order block. I think it was there is a fair value gap here. There is a small fair value. There is a small fair value gap here. This is the daily part that I marked. There is a small fair value gap here. So you see how the market went. This was exactly the buying point of this market. Are you seeing what I'm trying to say? So my entry confirmation will be at this point now. I'll go to M15. Under M15, what will I be looking? I'll be looking for a break of market structure. Are you seeing this point here? Here. So my entry confirmation will come when the market will break a structure 2 points. Are we together? What do I mean by saying 2 points? Like it wanna break, like can take two fair value gap consecutively under 15 minutes. This point here has been taken. It's breaking structure, like this an order. Why am I picking this fair value gap here? Because a fair value gap is created with an order block, personally with an order block, and it has broken structure and liquidity has been taken. So as for me, this is a break of, this is point number 1 of break of structure, and this is point 2 break of structure here, because this is a fair value gap. So the moment this market breaks 1, 2 fair value gap, I'll come and wait along this lane. There must be an order block or a fair value gap along this lane. Are we together? Are you trying to hear what I'm trying to say? The market should break 2 consecutively highs for me to know that this market is no longer a sell, it's a buy, or vice versa. Now it has taken this point 1, point 2. So the market must come down to this fair value gap again here, and I can continue now buying. So my entry should be here, my stop loss should be here, and my take profit should be where? Here, as I've identified before earlier. That is simple analysis of a entry time frame. Let me pick another chart. Which chart should I pick? Let me go to volatility 100 1S. Let me clear everything. So I'll clear everything for the chart. That's the first thing that I normally do under my chart. I'll clear everything. Then I'll come to the weekly. So I'll come to the weekly. This is my weekly time frame. So what are you seeing on the weekly time frame? I'm seeing one. This market took this high, took this green candle, took this low. That is liquidity. It came again, took this. It took two lows. Are we together? It took 1 and 2. So what are we expecting that? We are expecting that this candle should close above this point here. Are we together? I'm expecting that this candle should be above this point here, so that the market has completed, it is fully liquidated, like it's fully, what am I trying to explain to you? It is now a buying, not a selling market. Are we together? Now, if you know that the market is a buying trend, so you can mark this point here. You can show your, like, you can mark an arrow like that to tell you that I'm be looking for a buy if the market breaks this point here with what? With a body, not a wick. Are we together? It breaks with a body, not with a wick. Now the market has taken this, like, see here. Now what will I do here? I can mark this candle, this one that has taken liquidity here, and I go to the daily time frame to see if I can see a nice break of structure here to tell me that this market might come. Nice. If you can come here to this point that I've marked here, what can you see? I'm seeing a fair value gap here. And in fact, this fair value gap was done what? Was mitigated. This one has been mitigated. In fact, you could have bought this market very early in the morning here. It was yesterday, I think so. Yeah, it is mitigated. So that means this market might come down here to this fair value gap of ours. Are we together? Now, if you are trading this market and you see this something like this candle has mitigated, like it has closed below this fair value gap line here. So that market is no longer valid. That fair value gap is no longer valid. So at this point, this market is kinda confusing you. It's not giving you the right information. So you can come to H4 and see what the market is telling you. First of all, here there is a lapel from this fair value gap. So this market, keep on waiting and see. The moment this market will close this fair value gap with the body, are we together? If it closes with a body, you will no longer buy this market. You will sell till this point here. So wait the market to close below this fair value gap line or above this point line. Now, where will be your entry confirmation? The moment this market closes below this fair value gap, point number 1, if it sells very fast. If it buys very fast. Are we together? If it is buying, it is leaving what we call liquidity void, like a lot of fair value gaps. That means the buyers and the sellers are not equal in terms of energy. So if it closes below this point, you can mark this red line, this red the 4-hour candle here, and go to lower time frame like H1 and look for a fair value gap there where the market come back. Like let me show you how to be doing. The moment it wanna close above this point here, if it closes above this point, this I'm marking under H4, not H1. Like I'm just trying to show you our entry confirmation when you are at H1, assuming that this market has closed below this fair value gap. Are you together? The moment it does that, it will leave a fair value gap at that point. Then I'll mark that point. The market should come or must come to this point of fair value gap and do 2 consecutive break of structure, then enter that market, stop loss here, take profit where? Down here, and you're done for the day. And that's why they normally say trading needs time, patience, emotions, and money. So if you can't take your time, money, patience, and emotion, then delete your Forex account and quit. Are you together? That is the rule of the game. Hope I'm clear and I hope I'm audible. So I'll urge you to maybe ask some questions where necessary, then we can call it a day. Any question? Any question? No question, no? Uh, no question, no? So the moment this market we want to close below this fair value gap, we look for a sell towards down this place down here. And you're seeing these are daily time frame, and now let me give analysis at M15. The moment this candle will close below this point, the market must retest back to the fair value gap and have two consecutive market structure break. Two consecutive. By saying two consecutive, I mean should break one, break two, then you enter the market. So you'll be selling that market very confidently, and that's how is called entry confirmations. Hope you are together. We can call it